Hello, I'm Donald McIntyre, founder of Etherplan. We help people discover the best apps and dApps to manage their money on the blockchain. This is Etherplan Live, and joining us is Juan Llanos. Juan is blockchain, financial technology, and compliance executive and advisor. Hello, Juan. How are you?
Very well, thank you, Donald. Thanks for having me.
Thank you very much for accepting to be on and for your time. Juan, I wanted to talk to you and ask you about the current situation, about blockchain regulation, all the legal stuff. What is the sweet spot between the blockchain, which is like a wild space, and the law and regulation? But before that, can you give me an update about your background and what you have been doing lately?
Absolutely. Well, I think we spoke last on your show 5 years ago, right?
Mm-hmm. Yes.
It was an interesting time when Bitcoin started becoming mainstream, the second half of 2013. And back then, I was working in a FinTech firm called Unidos Financial, which is a retail financial services platform and MSB, money services business, and targeted to the underbanked. And precisely at that time, I made the decision to move into the Bitcoin blockchain world because I had been working on, first of all, on cross-border payments, and second, in compliance, anti-money laundering and regulatory compliance in that particular space. So I saw that those two areas of expertise, or those focuses that I had for a long time, were already being revisited and were very relevant to the Bitcoin conversation. So that's how I started. And over the years, I started advising. I jumped from project to project, trying to find my fit based on my background and my interests. And I was part of several startups in Silicon Valley. And I started getting called by multiple teams, like the Big Pagos people, the Big Wage, Metal, CoinMe, and I became an advisor to them. And I have a portfolio of advisees that I helped with regulatory strategy, compliance, tactics, and above all, operational preparedness for the future. So, and recently I joined ConsenSys. A year ago, actually, I joined ConsenSys as FinTech and RegTech lead, trying to create a awareness of first of all, a FinTech competencies. Company was not very financial services focused. It is now becoming, but increasingly. But so I tried to create the conversation about FinTech products, the application of blockchain to FinTech. And so that's what I've been working on. And I'm currently also working on a project of my own in the regulatory compliance world.
That is what you call RegTech?
Yes, and RegTech is a relatively new category that has to do, the way I see it is technology to facilitate compliance with regulations on the buy side, basically on the industry side, but also technology to facilitate oversight and enforcement on the government side. So you can think of a double-sided market where you have the state on one hand, the government on one hand, and the industry on the other hand, on the other side, right? So this side I would consider GovTech, or technology for government services and oversight, and this one will be RegTech, the side of the industry. And I think that we have come to a point where it's undoubted that regulation is not going to go away, right? That it's just a question of transforming and redefining it for the blockchain age. And that is a topic that I've been very actively discussing and exploring over the last few years. If you go to my slide share and see all my presentations, I have dozens of slides and presentations about that.
I'm going to include a link to your slides here.
Oh, thank you.
I think that like when we spoke 5 years ago in 2013, I think that all these things were not that defined. There was some definition starting at the time. I remember here in the US, there was some indications and from FinCEN of how companies like Coinbase, Kraken, etc. should behave. etc. But we didn't know this definition. It was like it was a gray cloud. We didn't know what was the separation between the blockchain that is a set of rules in itself, and govern the behavior of people or enforces the behavior of the participants, and then there was the traditional law, traditional regulation. So it was a separate space, and we didn't know what was going to happen. But I think that last thing you said, that now we know that the law and regulation are not going to go away, and I think it's pretty more defined also that the layer of the blockchain and the participants is one thing, and then the social layer and selling products and services and creating applications, etc., is something that's totally integrated into society. Therefore, the law and regulation. What do you think about that?
Yeah, so I agree that, back then, so there's a fundamental incompatibility between open systems and peer-to-peer systems and the law as it exists today. It's something that I explore in detail in my presentations, but I'd like to summarize it here for the benefit of your audience. And I think it's important to understand this, right? And obviously, when the Bitcoin movement started off as a big FU to the establishment, right? Or as a reaction to the abuses and the cold-heartedness of the previous generation of financial services engineers, if you will, right? And also the frustrating lack of accountability, for things that were so wrong and went unpunished, and there was no consequence about that, right? So we have to understand that that was the onset, right? But when you talk about technology, you have to talk about first of all, there's different layers, right? And we're I think unfairly, the whole world is looking unfairly at a base layer protocol and asking it to be overly compliant with many things, when we're not doing the same with SMTP or with a HTTP or whatever, any other base layer protocol, right? And so that's one thing that I think we should pay attention to. But the thing here with regulation and incompatibility I was telling you about is that when regulation today is enforced through intermediaries, there's always someone in the middle. It's jurisdiction dependent. There's always a constraint, a geographical constraint, and it's activity and product based, right? So if your activity, the activity or the service you provide, falls under a certain definition, that kind of regulation, that regime applies to you. A specific regime applies to you. I'm talking about insurance, or banking, or depository products, or money transmission products, or security. So it's all industry specific and product specific, right? Product based. And then comes this open blockchain revolution where there's distributed consensus, no central authority, peer-to-peer links in a network, on a network, full transparency on a ledger, and no permission to access the system, no limits, no borders, anonymity or pseudo-anonymity, a lot of flexibility, or sometimes some people believe inflexibility in smart contracts, for example. And then we have also probabilistic finality because of the possibility of something, some fork happening when the regulation demands full, final settlement. So that, to me, is obviously beyond the RegTech mismatch. Regulation always lags technology and development and growth, but there's a fundamental incompatibility here, right? So this poses challenges and opportunities, right? And so the first thing that happened 5 years ago when we first spoke was that FinCEN, Financial Crimes Enforcement Network, which is the federal regulator for anti-money laundering in the United States, every nation in the world has a similar regulator that enforces the principles enacted or proposed by another group, the Financial Action Task Force. So each country, those principles come from the Financial Action Task Group and get trickled down through national legislation and local regulations. And the federal responsible regulator for that in the United States is the Treasury Department and an agency within the Treasury Department. So this agency issued clarifying guidance in March of, it's going to be the 5th year now, on the 18th of March, saying that anyone that was, this trading or exchanging value for fiat or for government issued currency was an exchange. And if you were in control of the issuance of Bitcoins or virtual currency, you were subject to money transmission regulation. And that means that you had to register as an MSB, build a compliance program, and apply for licenses where required. And that means in the United States applying to 40 plus, 50 plus licenses sometimes in some jurisdictions. So if you include the islands, right? So that was the first federal regulator in the United States claiming jurisdiction for one aspect of this new technology that was the aspect of transferring value across the globe, right? The second was in March of 14. I don't know if you remember when the IRS issued this statement that Bitcoin was property in the eyes of the federal tax authorities. So now you would have to record capital gains, record the cost basis at the time of purchase, and then calculate the difference and then the capital gains with no de minimis, value, meaning that even if you had to buy a cup of coffee with Bitcoin, you would have to do that. And so those were the first two regulators, the first two spheres of regulation: federal anti-money laundering and federal taxation. But then over the years, I mean, and obviously the economy was so small that regulators were not even paying attention to it. We were very excited. We were part of the ecosystem. We were I wouldn't say fanboys, but the fan people or the excited people around this technology and the possibilities. But the government and the establishment was not paying attention to it until last year. And the trigger was a DAO in 16 and the emergence of the ERC20 protocol, right? And basically the extended programmability that the Ethereum platform offered, as a first fully programmable open computer, right, in global computer. And that is what really woke people up, and this is what happened in 17 with the token sales and the ICOs. That was the trigger for the regulators is waking up globally, and another aspect of regulation woke up, which is the securities aspect, or using investment contracts or raising money through a mechanism that was completely unregulated, that was very similar to a public offering of securities, but was not being issuers or were not paying attention to regulation. And what's happening now, right? Subpoenas and all that.
Do you think that in 2013 it was FinCEN with their guidance, then 2014 it was the IRS with their guidance, and then in 2017 the SEC wrote a full report about their analysis of the crisis with the DAO, no?
Right.
And I think that do you interpret that also as another guidance, the third layer of guidance from regulators?
Yeah, and in the middle, yes. And again, and the reason why this is happening this way is that there's no horizontal type of regulation focused on the protected value, right, or protected rights. For example, regulation is valid because it protects values from society, decides to protect certain things: health, loss prevention, rights, individual rights, civil liberties, all these things. So, but there's nothing that says we are going to protect these rights globally, and these are the standards to protect those rights globally. Why? Because we are, as a society, we're designed in nation states, jurisdictions, political and regional political groups and alliances. So it's a vertical categorization when the technology that emerged in 2009 is completely horizontal, open, and global. And so that was a first clash, right? The first clash was, the vertical, balkanized type of regulatory frameworks with something that was completely horizontal and global. So in the middle between the IRS in the United States and the securities authorities in the US, there were some cases, some commodities, situations and judgments, and there were a lot of consumer advisories from the world, right? There was, I have all those recorded on my databases, and you would hear buyer beware types of advisories, right? This is a high-risk product, don't buy, you may lose your keys. User control is fundamental. You have to be knowledgeable about these things. But everything was focused on cryptocurrencies or the crypto tokens of the first generation, the initial, the first cryptocurrencies. But now we have an exponential amount of growth in new types of tokenized assets, right? Digital assets. Yeah. And that is now posing the challenge of enforcement of these regulations.
You mean the new kinds? You mean are, for example, app coins or governance Correct. Coins or work coins and stuff like that?
Yes, the different types of tokens that they represent different things, confer or different rights to the users, and there was no definition for utility token. And the industry has done a great job of trying to define a new kind of token, which is the token that grants certain rights to users that is completely different from what is known as a security or an investment contract. Mm-hmm. And so the fact that now you need a digital asset to be able to access a service or to participate in an economy or in a marketplace, that was not possible before, right? That was it's a new invention that came with the blockchain revolution, basically. And so what needs to happen now is that there will have to be new regulatory definitions or new legal definitions of new types of assets that were not possible before. So it's a very challenging situation because of this incompatibility of things.
I think that the concept of incompatibility is it's an excellent way of describing it. This interview was about to analyze. It was about analyzing the sweet spot between the blockchain world and the traditional world with regards to law and regulation. But I think that the sweet spot can be described as an incompatibility. And I think that
I don't think there is a sweet spot yet. That's my unfortunate conclusion based on
the sweet spot. The sweet spot is an incompatibility, and so there's no sweet spot. It's like a bitter point for now.
Absolutely, and you see that I think that was happening today. I was looking at the tweets coming from Blockstack Berlin, right? Today, right? Mm-hmm. We're talking on this Friday, and this event in Berlin, where we know that the organizers of that conference and even Edward Snowden was one of the speakers. So probably remotely calling in.
Yeah.
So we see that there's the current world as we know it, with the wet code that Nick describes, and all these human people walking through or wading through mud to make things work, and distrusting one another, checking second guessing one another through accountants and lawyers, and then there's a future, this group of people, this sliver of society, thinking of a future where everything is fair for the consumer, is decentralized, is not subject to monopolization or control or dominance by anyone, but that is a very, very insulated sliver of society, and I think that the solution here is getting those in the same room, getting the same speakers without creating this adversarial attitude or approach, right? Without this adversarial approach, I would love to see people that are completely a Preston Byrne arguing with a Munib Ali and on stage and really trying to come up with best alternatives or to middle grounds or to stepping stones towards a different future. And this is what I've been trying to do personally. And in every conversation I have with people, I was in Singapore last week, and I was expecting to see Singapore is very well known for their forward thinking as a government and this openness to innovation, and they're trying to incorporate different points of view, open blockchains, closed blockchains, private blockchains, creating sandboxes, incredible environment for innovation. And then I was invited to speak at a law school where there was incredible close and skepticism to law and regulation on the blockchain, which is something that we believe, I personally believe, and many in ConsenSys in the industry believe is the future, right? Algorithmic regulation, automation, simplification, streamlining, everything that is repeatable. And why can we not create software definitions of the law? Why can't we not create databases of code that get called or pinged or leveraged or read, libraries that get read by systems, and this is what open law, one of our companies, is trying to accomplish, and they're building incredible infrastructure for that. So I believe that is the opportunity. And
I think what you're describing there, I think is interesting, because one thing is the world of the blockchain and all the possibilities that you described. People like I'm included in that group, that we see a future where people have their properties much better preserved, less hackers, a more horizontal, more distributed wealth in the world, more access, all that stuff. Then you have the traditional industries like the banking industry, insurance industry, mutual fund industry, that I think that are going to go through a process of deconstruction, not necessarily reduction of the industry, but yes, maybe deconstruction and separation of the roles. Instead of having a monolithic JP Morgan that has 20 business models inside of one big corporation, maybe they're going to be 20 different units. Competing with many other people in their own spaces, no. But this deconstruction, I think that what you're describing is on the government side is also going to happen. If you replace 5,000 lawyers with some algorithms, so there's also going to be some deconstruction there.
Right. I mean, what you're talking about is something that has been studied for a while, which is the unbundling of government services, of banking services or financial services, which is what gave birth to the emergence of FinTech, right? And the only obstacle to that succeeding is regulation, because regulation favors centralization and central control, and top-down control.
That's another incompatibility point.
That's exactly. I mean, if you think about all of there's dozens, and if not hundreds, of new, better solutions for consumer interfaces, mobile interfaces, payment services, lending products, insurance products, dematerialized or tokenized offerings, many things that are happening in the fintech space. The only obstacle for those things reaching the marketplace and having a shot at success is licensing, is the fact that only a few are able to obtain the licenses required to release and to offer these products to the public, right, based on current regulation. And so I've always said that the number one obstacle to fintech innovation, or to any innovation, is the regulatory frameworks we have today that favor the privileged, the early adopters and the early privileged and well-financed companies, right? So if you think even that is happening in the Bitcoin world, right? If you think about which company is successful today, right? Remember that early in 12, 13, there was all these, anarchist movements and the conversations in conferences, down with the government, blah, 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 and flouting regulation and publicly, I would say insulting everyone that was not pro decentralization. But think about the companies that are successful today. You know, if you think about successful commercially, at least having a shot at commercial success, right? Viability as a venture.
Yeah.
Coinbase, Kraken, Circle, Gemini, Bitflyer, Bitstamp, all these companies are now successful, are able to launch and offer their products because they invested early on in licensing and in compliance. They are, you know, they have thick layers of compliance. They understood that the foundation for business growth was to comply with the system as they know it, as we know it, and then at least have a shot at playing. You cannot play the game outside of the field, right? So you have to be within the field, right? So they understood that strategically. They swallowed the sour pill, because I know that those companies, we know that the founders of these companies, and they're all pro innovation and pro disruption, but they are not. They just did what they had to do to give viability to their products. So and this is what I think we need to do as an industry. And this is why I came to Joe Looping a year ago and I said, we have to build technology systems for both things, you know, to facilitate enforcement, policy building, policy release, monitoring and oversight of the industry on the one hand, on the side of the government, but also compliance and risk management on the side of the industry. We have to be able to support and to create this foundational layer on the ecosystem by building these technologies, and this is what we're trying to do now.
I agree. The compatibility between the blockchain world and the traditional world. The traditional world is not gonna go. The social layer is not gonna go. Therefore, its laws and regulations are going to stay, and both sides have to.
The question is how they are going to stay, and which ones should stay, and which new ones should go, should come, or which ones should go.
Exactly.
And this is a conversation that we have to have seriously, and this is why we need to start understanding. I am very hopeful on several aspects, but also very skeptical on a couple of aspects. And we can talk about that, but I don't want to continue on a negative note. I have my inventory of I think, very high hurdles to jump over. But one of them is, for example, the fundamental, diametrically opposed policy goals of full transparency demanded by law enforcement and tax authorities on the one hand, and on the other hand, the civil liberties policy goal of confidentiality and privacy. So,
but that's interesting. That's interesting.
Insurmountable, in my opinion.
That's interesting because that incompatibility point of privacy versus transparency exists already in the traditional world.
Exactly.
Banks were supposed to be secret places where people had their money, but that secrecy is gone, basically. So, well, let's wrap it up. And on a positive note, I would say that regulators are very open. The majority of regulators are very open to analyze this, to learn about the industry instead of just blocking it. So I think that would be a positive point at this point.
Sure, absolutely. I think that, and again, I always also make a distinction between three types of regulators: the policymakers, the stimulative regulators. They want growth, they want development, they want jobs, and these are the types of regulators we're seeing in Wyoming, Delaware, and Singapore, trying to create jobs, innovate. Estonia, all these forward-thinking, stimulative thinking, right, of policy goals. On the other hand, in the second group is prudential regulators. These are the oversight regulators, the guys that impose the controls, because we as a society impose controls on ourselves, right? One of those controls is, for example, the checklist that every pilot does before every flight. So if we didn't have that checklist, many bad things happen with flight. So that is one of the controls that we impose ourselves through regulation and through best practices. Right? And then number three is law enforcement. So these are the three types of regulators. I think that the most positive ones and that we're seeing globally are the stimulative ones. Policymakers are trying to find ways to create jobs and prepare for the new economy. And we are seeing that the token economy, the digitization of all things, the automation of all things is going to happen. So we have to find ways to make that work for all of us, for all of humans. And it's a big, big challenge. But I think it's doable.
Excellent. Bueno, Juan, I think this was an excellent conversation and incredible analysis by you about the current situation of this blockchain world as compared to the traditional world and law and regulation. We have discovered that instead of a sweet spot, we have a incompatibility spot. So I think that's very important to.
Yes.
It's very important to understand so we can work on it and solve it.
Exactly. 100% agree with that. Exactly.
Bueno, Juan, thank you very much for your time.
Thank you. Thanks so much. Appreciate it.
Bye-bye.